Hi, I'm Bert Nuxbaumer from macrobeat.co.uk. We had really not too much this week. European PMIs, which sort of looked okay. We really had stunning data of late out of the US, but for some reason, the market is not really turning its attention on the dollar as such, and the US in terms of the US economy outperformance. I still feel at some point the market has to come around to the fact that the US economy is probably outperforming everything else by miles. But in the short term, it feels there's a little bit of a new twist in the market where a lot of the foreign central banks start to talk about how much of the US stimulus is going to help their domestic economy, which seems that we suddenly talk about strong US data means strong global growth, and hence the market started to react in some of the areas like in emerging market currencies as if this is all just bullish for global growth and the sort of US picture is being left aside. This may work for a while, definitely until the Fed shifts gear, but personally I still think at some point in time, maybe 2-3 months down the road, the Fed will be the first one to actually really shift gear, but that's not for here and now. Generally, I think we just see the same sort of language from every central bank out there. Exit rather late than too early. So the price for going too early is a lot higher than going too late. And as long as this is sort of the language out there that global central banks use, it's very hard to find divergences. And really, we have to wait for the data to sort of make a decision which central bank to believe and which one not to believe. The first real test might be next week. We have US CPI on Tuesday. So that's going to be a very interesting one. And that's probably going to be the key event into next week. I have a few slides for you. The first one being euro dollar. Here we see the 116.95 next FIBO support really held. And we've seen actually a lot stronger bounce off that level than I would have expected. We're sort of dancing around the 200-day moving average. Reality is, as long as we stay below 119.45, the downtrend in the euro should be okay. Break above would really start to put the question on this latest rally in the dollar. The next slide we have, this is the Aussie dollar. Aussie dollar has fallen out of this sort of one-year trend for a while, and it has gone sideways. We failed to really close below 75.65 last week. We had a bounce, but the bounce held so far below the mid-daily Bollinger Band. We have the big trend line 76.80. As long as we stay below there, we will most likely head lower towards a lower 74 handle. But break higher again would be a big setback for the current dollar trend. But for now, I still believe it's going to work. The next chart is the dollar index. As you can see, same here, we sort of rallied up to 93.5, bigger setback this week down to almost the sort of key breakout area of 91, 92.5. We got to stay above that level to keep the dollar uptrend in check. Break below, same as what we've seen in Aussie and the euro, that would really be a setback for the medium-term trend. For this point in time, I still believe it's going to hold and we're going to be bouncing back. The next chart is Euro Aussie, a weekly chart. So the reason I show this one is really about to understand a few of the things that go on out there that are probably not linked to any macro data or any sort of narrative we have. We've seen stronger demand in Euro Aussie. We tested this big pivot area here at 156.75 today. It starts to look that there's some major trends that we had, Aussie CAD, Euro Aussie, some of these big trades that worked since the March 2020 extremes. And it seems as if the market comes around to start taking profit some of these big trends. That makes life in the short term a little bit harder in FX because it means we have a few random and one-off moves that we see out there, but it starts to feel that trades like the Aussie outperformance, Kiwi outperformance might actually indeed see a further setback. Last but not least, gold, strong reaction of that big level we looked at down at 1675.80 level, but we're just getting to this massive 1763.5 level, the big breakdown area, and I just cannot see gold breaking any higher at this point in time. I think it's going to stay sticky around here, waiting for CPI next week. This is really it for me for this week. Thank you very much indeed. Bye-bye.